Good afternoon, everybody. This is your market update for Wednesday, January 25th, and we'll jump right into it. So stock market today, initially futures had indicated that the Dow was set to open down about 200 points. NASDAQ and S&P 500 were set to open down on the day as well. That is, in fact, what happened. However, the Dow has clawed its way back a bit and is down off of its worst levels of the day, currently down about 40 points. NASDAQ and S&P 500 still both down on the day as well. Primary reason for that is due to some corporate earnings reports that continue to come out that are leading to some intensifying concerns about recession, about whether or not companies are struggling with lowering consumer demand, higher interest rates, things like that. There still is a lot of corporate earnings reports that are still set to come out over the course of the next several days. So we'll wait and see how that impacts the market, and that kind of follows suit with what we've seen so far. Mortgage-backed securities yesterday actually opened the day initially down 9 basis points, but clawed its way back, rallied back in the afternoon to open the day up 11 basis points. Today opened down 3 basis points, but have since then clawed their way back and currently up 13 basis points on the day. So we've seen this happen the last couple of days where mortgage-backed security market opens down just slightly, but rallies back in the afternoon to finish the day relatively strong. Not anything significant, but as I always say, it's nice to see green on the screen, certainly headed in the right direction. As I've mentioned multiple times, this week and last week, the big hitter this week is going to be the PCE report, which is the Personal Consumer Expenditures Report. It comes out on Friday. That is the Federal Reserve's favorite measure of inflation. And the market is anticipating that the core inflation number will drop from 4.7% to 4.4%. The core inflation number is the inflation number when stripping out food and energy prices. That number is when you hear the Fed talk about their target rate of inflation being 2%, the core rate is the rate which they're referring to. So obviously, if it does come down to 4.4%, still a good ways off from the Fed's target of 2%, but again, certainly headed in the right direction. If the core rate drops more than what the market is anticipating, it should be a very good thing for mortgage-backed securities and a good thing for interest rates as a result. So we're hopeful that we'll get some further relief in interest rates as a result of the PCE report that's set to come out this Friday. As always, we will continue to keep you updated. I hope you have a great afternoon, and I will see you tomorrow morning.